Hello and welcome to another episode of Monday Markets. As always, we're brought to you by Woo. Links available in the description below. So BTC is back at 60k. If we look at the range that we've had for a while within this consolidation, we have the monthly highest and lowest close, and then we have the daily highest and lowest close within this consolidation, and we're currently trading around the range low. Now, generally speaking, when you're dealing with high time frame consolidations, you want to do business at the extremities, which is to say at or above the range high, at or below the range low, and you want to generally target the other side of the range on the assumption that the consolidation is going to continue and the market will remain balanced. I think that applies in ordinary circumstances. For me personally, I'm not currently interested in rebuying the range low, and that is simply a function of the amount of time that we've spent at this range low and the amount of setups that we've had form at or around 60k. So we've had many tests of this consolidation, or the range low specifically, already, depending on how you count, up to 6 tests, if not more. Another thing that makes this setup personally inactionable for me is that we've already had a failed breakout at the range low, which is to say, wick, all being respected, and then this portion here, when we closed below and then ended up closing above, that was really the sort of extreme version of the range being tested, and then it managed to, after a short consolidation, make its way to the other side. And now that we're back here again, I guess in the simplest possible terms, the market is, for me, out of setups, because we've had all the wick tests, the candle closes, the close below, close back above. There's no trade to be taken within my system at this range low at the moment. I can obviously just can that and use my discretion, and if there's a daily close back above 61.8, just punt it with a stop wherever the low forms. That's always an option. But at face value, with how the market looks right now, given all of the time spent at this range low, I'm just not particularly interested in rebuying it. And that reasoning is twofold. The first, as mentioned, we've already had a ton of setups, including a failed breakdown. If that's not enough and the market starts accepting and closing below 60k, I would have to treat that breakdown as genuine. And if the breakdown is genuine, it's going to be a big breakdown, and I don't want to buy that. The other argument here, and it's related to the first one, is that this entire sort of consolidation, the market is balanced, right? And generally speaking, the longer the consolidation, the larger and more violent the expansion that eventually follows. So if this ends up being the shift from a range-bound market to a trending one, or from balance to imbalance, and if we basically break this range, and at the moment the risk is breaking it to the downside, given that's where we're trading, the move will be sufficiently large so that I don't want to be doing business at the range low. Like, realistically, if big consolidation equals big expansion, and if this is where the expansion begins, I would expect the market to reach towards the next area of high time frame support, which at the very least is the lowest swing in the range, but realistically the next area of structure is sort of around 50k, this consolidation here. So that is the risk, right? The risk is that we spent all this time here, and you sort of buy the range low, make money, buy the range low, make money, buy the range low, make money, buy the range low. Just kidding, it's actually not a range, and now we're trending, and now you're fucked. And where I am right now in my trading frequency and portfolio management, and being a washed up conservative old boomer, I don't want that type of risk personally. I'd rather miss the trade or buy it later for a worse price with more quote-unquote confirmation, rather than potentially knife catch a trend regime, or rather knife catch a regime shift. That's just not for me. And again, there's some element of personal preference and risk appetite there as well, so please don't take that as gospel. The other thing I'll mention is there is an intraday level that could potentially get me interested in the market. It's probably unlikely to be the range low itself, but there's a nice 4-hour sort of resistance level consolidation at 63.3, 63.4. First of all, it falls quite nicely between the range midpoint and the range low. So it's like a mini midpoint in its own right. But also it's just a very nice level of previous resistance, breakout, last bit of support before the breakdown. So I think it's probably the best support resistance level that's close to the range low. And if the range low is going to be strong, then it should have no issues breaking above 63.4 or wherever this level lands. The logic there is pretty simple. If high time frame support is strong, then it should have no issues breaking low time frame resistance. And so the corollary of that is, if high time frame support is weak, then it won't be able to break a lower time frame level of resistance. So it's a pretty low bar to set that, hey, I'm essentially suspicious of this range low given all of this. I don't want to buy it outright, but if it gives me enough evidence, I could nibble at it. And so what would be enough evidence? The evidentiary threshold for that is 63.3, 63.4, turning from resistance to support. Unless that happens, or unless something really compelling happens at the range low, I personally don't like the risk of the equivalent of buying 6k before the market goes to like 4k or whatever. I don't want to be caught on the wrong side of a regime shift if it's happening here. And so the cost for that comfort is either missing the generational Pico bottom, if it is one, and the other potential cost is having to pay up for an entry, where instead of buying at or around the range low, and if I still want some exposure, I have to buy up at a higher price. But for me, that trade-off is fine. For you, that trade-off may not be fine. So as long as you know the trade-offs, you're in a good position, but there's no free lunch, right? If you're getting the good entry, there's a risk that you get fucking carried out on an ambulance if the range breaks down. If you're waiting for a later entry, there's a chance you don't get it or that you missed the way more comfortable entry anyway. So I think just outlining those in the most simple terms is a worthwhile exercise, but this range low after all the setups isn't for me. I think it would be salvageable if we didn't have this failed breakdown. For me, the failed breakdown is like really should be the final move within the consolidation if the market's going to be bullish, and vice versa. Like a failed breakout is the final move if the market is going to be bearish. Once it starts offering like A+ bullish setups and eventually bleeding back down to those same levels, my mind starts shifting more towards, okay, well, this was a fake out, but then the risk of this being the real move is significantly higher, and I just don't want that risk personally. So that means either missed trades or later entries. And the upside is, if this thing fucking teleports, I won't get fucked. But if it teleports this way, I might not make money, and that's fine for me personally. Yes, that's really it for BTC. Am I missing any important context? I don't think so. Like, realistically, guys, I just don't like trading levels that are beaten up, especially ones that have had a failed breakdown. This is a level that's beaten up, and it's had a failed breakdown, so I'm not going to have a long setup there unless I get a bit greedy and go for something really low time frame, or I'll just be a boomer and wait for something on the higher time frames, realistically. I know honesty is boring, and, as soon as you have a trading channel or social media following, you're supposed to have a setup at every level and a view of the market at all times. But sometimes I'll just look at this thing and say, why are we back here? It looks a bit shit. Maybe it bounces, but whatever. We spent a lot of time at 60k. I'll look at it later. That's kind of how I approach it in my head. On the ETH side of things, I was never fond of weekly structure on this thing. I kind of go back and forth on the reliability of this weekly cluster. It's okay, I guess, if you're like a really big bull ETH. But the structure here has been kind of rough ever since we've been monitoring the 3600 sort of ETF consolidation here. And I think the market's been weak ever since that broke to the downside. There's a lot of sort of repositioning, rebuying for the ETF here, but that seemed to, use up all the juice, so to speak. We didn't go anywhere from that point onwards. And if you were tracking this level somewhat closely, it gave a very sort of textbook previous support turn to resistance flip, and that was my level for buyers for some time. And since that point, we've essentially had a structure of the market walking down, which is to say consolidation, breakdown, consolidation, breakdown, etc. So until that shifts or the market reaches sufficiently discounted levels of support, I don't want to step in front of this thing personally. If you're intraday trading, similar to BTC, where you kind of set a level slightly higher and say, okay, well, the high time frame structure is a bit suspicious, but if it can make its way through some low time frame structure, at least there'll be some sign of strength and give me an invalidation. I think for ETH, if you're going to be aggressive, lower time frame with it, and again, this is to be clear, aggressive lower time frame, I don't think the high time frames are particularly interesting, at least not for me. It would have to be a move back above 3380, 3400. At least at that point, you can make an intraday argument that, yeah, we had this final range, and it was getting walked down, but look, it actually, instead of, unlike 3600 when this range broke down, it didn't continue lower, but actually ended up reclaiming, and that's a sort of shift in behavior, right? In the most straightforward sense, when this range broke down, turned to perfect resistance, went lower, and so your argument would be that yes, we had another range breakdown, but instead of providing resistance and going lower, it actually flipped it, which suggests that there was a lot of sloppy positioning at the lows and maybe some buyers willing to soak that out. But until you get that shift, I think you have to take the market at face value, and that face value is that the ETF repositioning is getting kind of filled back in. So unless you see a shift in structure or a shift in behavior or some sort of strength, I'm not super fond of this thing. Most notably because there isn't like a weekly or daily structure that I'm particularly fond of at this specific juncture. Altcoin's a bit of a mixed bag. I mean, some of them are still really strong and green, so correlations are kind of all over the place. I think this is like a really good time to either set up some pair trades or just trade altcoins for what they are. But again, for me, as a conservative, washed up boomer, I don't like the asynchronous risk of buying altcoins at a BTC extremity. And if I'm wrong about the BTC extremity and, BTC like actually breaks 60K, I'll be very much wrong about my altcoins. So I'm not a huge fan of that personally. On the Solana front, the weekly close was, I think, interesting. I believe it was slightly below the 135 level. Yeah, it was. So even if I wanted to, at least if I'm being systematic about it, there's no long setup for me here. Quite the contrary, if anything. The only thing that can get me reasonably interested is if in a short term, like in the short term, we come in and clean up a bunch of these lows here and get some outsized deltas that don't go anywhere. At that point, I could make an argument that in the short term, the selling is exhausted. It's exhausted into a high time frame level and forming like a failed breakdown. Didn't manage to continue through 120, and maybe that's good for a bounce, but on a swing basis, because the weekly close was shit, there's nothing for me here personally. Is there anything else to talk about? I don't think so. I'd rather keep this one brief. The summary version is that BTC is at the range low. I don't want to buy the range low because it's been tested a bunch of times. If I'm right, the market goes down and I don't lose money and I feel good about that. If I'm wrong, the market goes up and I think, oh gosh, maybe I should have bought the range low, but it makes no difference because I don't lose money. And it depends on your personal preference. Like if you're really gunning for the best, most aggressive entries, you're going to have to do business where there is less certainty. But that's personal risk appetite, portfolio management, etc. In this instance, I think the reward of catching a bounce at 60K is not greater for me than the risk of 60K breaking down and the market fucking teleporting to the next high time frame level. That's a pure judgment call. If you disagree, I think that's on pretty reasonable grounds. If you said like, hey, Cred, I fucking bought the range low because the market's been consolidating and I'm not diddling in the middle, I waited for the extremity and bought the range low, am I a cunt? I will say no, but I just disagree personally, or at least it's not for me. Maybe something spicy happens during the week. Either this 4-hour level gets flipped and I nibble at it, or on the daily we get like a really nasty close below, close back above with a spike of previous day's low, something of that nature. That would be good, but just sort of this blind bleed back into the range low for like the 5th time, no thank you. If we look at the leverage futures perp side of things, if your thesis for buying the range low is some version of, well, this is like a big wipeout capitulation, I don't think that's entirely true. Open interest is still like, and obviously this is a mixture of longs and shorts and stuff, right? But we haven't had like properly outsized liquidations that are significantly beyond the mean on these types of days within this range. I mean, this is obviously one of the bigger bars, but we've had larger liquidations at similar levels of open interest within this range as a whole. Right, so within this, that's some advanced TA that I'm not ready for. But even within this consolidation, we've had sort of liquidations and days of long liquidations that are similar in magnitude. So I don't think this is anomalous in that, well, look, this time it's like a huge wipeout and positioning has really shifted. I mean, open interest took a haircut and there are more liquidations than recently, but it's not a sort of anomalous standout amount for this range. And you'd really want to see open interest properly wipe out and liquidations properly spike if you're making a wipeout argument. So I don't think the wipeout argument applies to the range low. I personally don't see it yet. And then if we look at another data point, so open interest and liquidations do not support the idea that this test of 60K has come with a particularly large flush. If you look at quarterly futures basis, it's still double digits. Historically, this hasn't been the case as much recently, but historically, when we were dealing with like proper leverage wipeouts, you would see quarterly futures get backwardated, which would mean they were trading below the index price or below the spot price, and this number that you see at 9-10% would actually, for a very short moment, be close to zero, if not negative. And so the sum total of those observations are that we're retesting the same range low for like the umpteenth time. If you're going to rebuy it, or at least if I'm going to rebuy it, I need a good argument. The good argument currently isn't available from a technical point of view, so then I have to look at the flows/positioning point of view, and to justify buying it, I need to make a compelling argument for, okay, yes, we're retesting this for the millionth time, but hey, this time there's been a huge shift in positioning, everyone's mega bearish, there's been a big wipeout, it looks like a nice place for a reset, and just looking at the magnitude of changes in open interest and the amount of liquidations, I don't see this being like particularly anomalous. And from a quarterly futures point of view, I don't see like a large wipeout in that either. So if I'm left without a compelling technical argument and I'm left without a compelling futures sort of positioning, reset, flows, wipeout argument, I'm left with fuck all and I'd rather wait. I know that's boring, but hopefully sharing the thought process helps someone or doesn't. I mean, you can let me know in the comments. These shows are for you. So yeah, let me know what you think. That's all from me. Before you click off, I'd appreciate if you left a like on this video, and your feedback is very much appreciated. Maybe we'll do some more frequent updates this week because it's pretty fucking spicy at the range low. So maybe Altcoin Thursday or something of that nature. I feel every time I mention it, I feel bad because we never fucking do it. But maybe this time is different, TM. Thank you to Woo for supporting the show. Hope you'll have a wonderful start to your week. The market will always be here. Don't be too down on yourself, and talk to you later. Bye-bye.